Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 24th of March. All right, I think the market's in a bit of a state of flux. I mean, we've seen the cryptos rally. I think El Salvador is asking Binance to sort of help them sort of roll out, the major, get some bonds going, get some all the crypto action going. A few others, central banks, Honduras, not going that route, going more of a central bank digital sort of currency, whatever they want to call it. There's also a bit of Ukrainian money and European money going in and supporting the cryptos as well, like a bit of a spot to park your cash, right? So that's actually putting an underlying bias or bid tone in the cryptos. Look at the US equity markets. I think yesterday's move may be a dead duck bounce, right? They've just come off, not as aggressive as they have in the past, but down 1.5% or 1.3, 1.2. It's, neither here nor there. US equity futures at the moment, not really doing much, right? No clear direction. The commodities is starting to really become a major thing, right? We're seeing, actually, let me just bring that up because this is like, we need to start paying attention here to the commodities because they are going to create extra inflation that central banks will need to deal with. It's worth keeping an eye on these. Iron ore continues higher. Gold, well, it's sort of back up at 1945, back off those lows. Same with silver. You've got copper heading topside, and light crude heading up, and Brent crude. Right now, these are tradable instruments in themselves. Good trend lines, good setups. Now, it's no wonder the Aussie is in particular going up with the commodity currencies, Aussie, CAD and Kiwi. Copper and gold, two big signals for the Aussie dollar. All of a sudden it's gone from 72 to almost, well, it is 75 cents. Now, so that's, commodities are a major thing. But when we're trying to work out what's going on, as in what's happening right now, it's a little bit sort of trickier and you need to know what to look at. So if I just come back to the global markets, and this is where it sort of pisses me off a bit because with the news services, they need you to keep reading. Now, US stocks, Wall Street drops as oil rally, Russia-Ukraine conflict, fuel worries. 2 days ago, I was like, yeah, we've got a deal coming up and equities are rallying through the roof. So what they're doing is just putting that Russia-Ukraine situation in to match up with the various issues. Of course, as things develop between Russia and Ukraine, we've got Biden now ready to put more sanctions on Russia, like squeeze him a bit more. Well, that's going to probably put a little bit of downward pressure on euro, make things a little bit trickier, but it's all part of the whole situation. We've seen this, 20, 30, 40 times over the last 30 years where events like this is the way they roll out. So, so to say this situation is driving equities up and then saying it's driving equities down the next day, you really start to lose faith in the actual what the news is, right? So then you're coming back to try and work out exactly what's going on. This is where what I was talking about commodities. These things have been rallying, right? With the various issues, oil in particular, of course. I think it was actually the Caspian. Let me just come back over here just to give you a look at what it is. The Caspian pipeline disruption. Okay, that was the reason for the spike up in oil. So what you need to do is work out what's real and what's not, what instruments are moving, and then try and work out if it's a tradable event, right? The US market is the primary market for where things are being impacted, especially on the equity basis, right? US equities get hit. You can be sure that'll roll into the Asian equities and European equities, right? Into the future markets as well. We're looking for the US equity futures, particularly in the Asian session, to work out, is the move in the equity markets going to continue down or is it going to bounce? At the moment, as I said, it's sort of right in between. That doesn't make it easy to trade the major currency pairs. In actual fact, you probably want to be looking at the commodity currencies, CAD, Aussie and Kiwi. They're the ones that look really good. Euro, of course, is central to the European situation. That's worth keeping an eye on as well. Then you've got the commodities as instruments by themselves to be trading, right? The safe havens, well, they aren't really doing too much at all. Dollar yen, dollar Swiss. As I said, Bitcoin is a bit of a safe haven. It's where, if you're caught up in the Ukraine or Russia situation, well, you'd maybe park your cash in the cryptos. They are volatile, but at least it's somewhere where you can put some cash. And then one thing that we need to be focusing on as we go through this is the oil trade, right? Whether you're looking to trade equities themselves, like say Chevron or Exxon, CAD yen, or the Canadian dollar, or actually the oil instruments themselves, you're going to have opportunities to trade these as that Russian-Ukraine situation either develops further or eases back, right? We're basically in a state of flux, waiting for the next event to happen. And that's, where trading is. This is where the patience comes into play. You've got to be patient and wait for these things to happen. The dollar, okay, I got the dollar index here. The dollar itself is not doing much, right? What we're seeing is other instruments do things. As I said, we've seen a little bit of a correction there in the equity markets. I think that's about as far as they go. Bit of a sideways movement in the cryptos. Gold's back up, but now it's in the middle of nowhere. Very hard to be trading that. And same with oil. It's sort of jumped back up again as well, which to levels which I'm not comfortable with. Volatility index tells me the market is very comfortable with the way the markets are positioned at the moment. And we do have euros sitting there waiting for the next move in Europe, right? Whether it's a positive outcome from the Russia-Ukraine situation or something else, or a negative one, that's what the market's waiting for. At the moment, there's no fresh news to really kick it into gear, right? So that's why the markets are sort of sitting here waiting. So while we're waiting, keep an eye on the US equities. That's one of the key instruments as well. It's the last week of the month. I just want to keep reminding you this. So this is where the movements in the currencies, because all the key data comes out in the first couple of weeks of the month, things get loose here. Like you can see the news is actually loose. They've got nothing to talk about. They're waiting for next week where we got non-farm payrolls. We got a whole range of stuff coming out. That's what you want to be waiting for if you can't see something right now. All right, guys, that's it from me. Have a good one. Cheerio.